Hello, I'm Lelda Smits for the Finance News Network, and joining me from GPT Group is its Chief Investment Officer, Carmel Hourigan. Carmel, welcome to FNN.
Thank you.
GPT Group has just partnered with GPT Wholesale Office Fund to buy a new property. What have you purchased, for how much and from whom?
GPT and the Wholesale Office Fund, which is called GWOF, has purchased a office asset in Melbourne. It is called CBW, which is the corner of Burke and William, and we've paid $608.1 million, and we've purchased that from CBus.
Now, as you mentioned, CBW is also known as corner of Burke and William. What makes this asset attractive to the company?
Well, GPT is about buying high quality real estate. We are obviously diversified across office, retail and logistics. And for GPT and for GWOF, this is a perfect fit for our strategy. It's high quality, it's in a very strong position in location in the Melbourne market. It's 100% occupied in terms of its office space with very high quality tenants.
And how does the CBW asset align with and complement the remainder of GPT's portfolio?
Well, it's an interesting question because obviously at the moment we are very focused on the Sydney and Melbourne markets where we see the office recovery coming. By acquiring this asset, we'll move to around an 88% exposure to Sydney and Melbourne. So it's very complementary for us. We currently are in Melbourne and we are selling an asset, and we'll recycle that capital into the CBW opportunity.
So when do you expect settlement of the transaction, and which tenants do you anticipate filling the property?
It'll settle in around sort of 4 to 6 weeks, just a normal settlement period. It is actually fully occupied at the moment. It's well located near the legal precinct in Melbourne, so we do have a slight tendency to attract legal tenants, and we do have some significant legal tenants already in the building. So that's one of the key opportunities for us, over the next 10 years to continue to work that exposure to the legal sector as well.
And Carmel, what financial contribution does GPT Group expect to receive from the asset?
Well, there's a number of areas where we're going to benefit as a group. The first is we're acquiring this on a 6.5% core cap rate. That is, a very good, in terms of income, that is a very good exposure for us. In terms of the funds management business, because we're buying 50% of this asset in our funds management business, it means we will get additional income coming from funds management fees and also from property management fees, which will enable us to have an enhanced return for our shareholders.
So how much has the company invested into acquisitions this year, and what is your strategy for securing new assets?
We've had a really busy year. We've acquired with this asset around $1.7 billion in transactions, and that's been across office and retail. Interestingly, the majority of those acquisitions have been in our funds business, and that has been a great result for the funds business and for the shareholders who are invested in those funds, but also for the shareholders in the GPT Group stock, because we've obviously been able to get the earnings accretion coming from that.
And where is most of your office portfolio located, and what is the rationale behind being focused there?
We are majority located in Sydney and Melbourne, so around 88%. The reason why we like those two markets is that we think that is where the recovery in office demand is coming in the Australian market. We do have a small exposure in Brisbane, in two of the highest quality assets in Brisbane, and we're very happy with that exposure. But we see that a pickup in consumer confidence, in business sentiment, will impact very strongly on those Sydney and Melbourne markets. And obviously with a recovery in the non-mining sector, that is really an Eastern Seaboard story.
And finally, Carmel, how are you aiming to structure GPT Group's portfolio over the longer term?
We have currently, over the last few years, we have been moving the portfolio around. We have actually divested retail assets over the last sort of 2 to 3 years. We've been using the capital from those divestments to invest in the logistics sector, and we've been able to move to a much higher exposure to logistics. So 2 to 3 years ago, we would have been sitting at around 11% exposure to logistics. As of June this year, we've moved to 15%, which is a fantastic result. And we've been putting that capital into logistics development, particularly in the Sydney market, which has had great results for us, and we've been able to achieve returns in line with our strategy.
Carmel Hourigan, thank you for the update from GPT Group.
Pleasure.